Good morning, everyone. I'm Sierra Sun, founder and managing partner of C-Square Ventures. It's my great honor to come back to the Hack Season's conferences, and so glad to be here with all of you guys, and thank you for showing up so early for this amazing panel. And let's do a round of quick introduction for all of our amazing panelists.
Sure, so I guess I'll start. I'm probably slightly different from the other members in the sense that Vortex originally started from market making and liquidity provision. That was the core of the business before we got into the venture capital side of the business. But after we expanded in this direction, obviously the logical step afterwards was to open the VC branch as well. And that's what we're doing right now. We're also actively bridging some of the Web2 capital to Web3 right now. And probably that's one of the main agendas in terms of like the venture activity for us at the moment.
Hi, everyone. My name is Kelvin Ko. I'm the co-founder of Spartan Group. We do a couple of things in the space. We invest through three funds. We have a liquid long-short fund, and we have two early-stage venture fund. And the second thing we do in the space is we advise crypto companies with their fundraising and M&A and restructuring. So we've been in the space since 2017, and I'm glad to be here talking to all of you.
Good morning, everyone. My name is Rakesh Kedwani, and I'm the co-founder and CTO of ION and a venture partner at Protagonist. In my role as an investor, I primarily focus on Web3, AI, and anything at the intersection of Web3 and AI. And very recently, I transitioned into a co-founder role where I'm building a decentralized AI company because I realized that there was a gap in the market, and instead of investing in a company, I'd rather build one. So that's me.
Hi, everyone. My name is Kirill Malev. I'm venture partner / venture advisor at Top. Top is the open platform. We are investors in major companies inside Ton and mini apps ecosystem. Pleasure to have you all around.
All right. So going into this panel, right, I just found that all of our investors here on the stage with all different backgrounds. So me, myself, I used to run listing and investment for Huobi and also built out an institutional business from an exchange background. And we have market makers, advisors, and even from projects. So I'm very curious to hear your thoughts on what you think of the general market right now, because the market has come back to about 3 trillion right now with a 150% year to year. And also for the Q1 investment total amount, we have peaked since 2022. However, the deals amount have fallen about 19%. That's a huge number compared to even last year. So is this the trend saying that all of the VCs right now, you're investing into bigger ticket size and fewer deals, or you're investing, deploying more amount because you're looking more into liquid tokens? So like, generally very curious about your thoughts on this one.
Yeah, I guess that's actually a very evident trend in this Q1 and like the part of Q2 right now, in the sense that probably what we're seeing right now is that for the majority of the mid caps and the small caps and et cetera, OTCs are actually the go-to investment type. I'd say a lot of the tokens out there, especially the ones that are launched very recently, they're actively exploring the OTCs. So OTC market is probably booming right now in the sense that I've seen more providers now than ever before. A lot of the businesses also pivot to OTCs as well, and I guess that also applies to some of the bigger projects as well. But still, for bigger projects, it's much easier to get a raise even now because there is a certain number of premium projects. And I'm curious to hear your takes as well. But there is a certain number of premium projects that probably are guaranteed to raise a certain amount of capital, and that's not the case for obviously the majority of our projects. So I guess you're right in the sense that at the moment, a lot of, especially at least from our portfolio partners and from our portfolio ventures, I don't see anybody actually investing into like the small or mid caps at the moment. I see them mostly doing OTC deals or just some advisory.
Yeah, from my standpoint, I actually had dinner last night with a bunch of investors, market makers, and so on. And one of the questions I asked them was, how they compared the activity levels today versus what we saw back in 2021. And unanimously across the table, everybody said that 2021 was the best year, right? And we're nowhere close to eclipsing that. And that applies to all segments, right, in terms of market-making fees or performance fees that you're getting from out of your funds and so on and so forth. So we're not quite at that, level of activity we saw in 2021. However, in 2021, obviously a lot of the venture funds raised a lot of capital, right? 2021, early 2022, just because we had such a big cycle. And so the activities that we've seen over the last couple of years really reflect all of that fundraising that happened in 2021, right? And you've seen so much funding and so much VC activity over the last 2 to 3 years. Now, the challenge right now is that a lot of venture funds have fully deployed their capital, and many of them are coming back to the market to fundraise. I think there must be over a dozen funds that are currently fundraising. And the fundraising environment is tough, right? It's much harder than it was in 2021. And not surprisingly, a lot of the LPs are asking, we gave you money in 2021 or 2020, where's our capital? What DPI do you have to show? And somebody told me yesterday that out of the 30 or 40 funds that they track, literally only 3 to 4 funds have any DPI, right? Which means that 90% of the funds that launch the last 4 to 5 years have not returned any capital to LPs. And so I think that's the challenge that the industry has to navigate. And many of even the funds that have been relatively successful in generating DPI, they are raising new funds, which are a fraction of the size that they raised in 2021. So my prediction is that over the next couple of years, we're going to see funding activity falling. And in a way, that's not bad. I think part of the problem that the market faces today is that there's just so much supply of new tokens coming to market every single day, right? Because of all the activity that happened over the last few years. And there's not enough liquid capital or demand to take all of that supply. So there has to be some rebalancing. And I think this funding situation that VCs are finding ourselves in right now will sort of, in a way, correct that problem that we have, right? So I think it'll be a harder funding environment, harder fundraising environment for VCs, and VCs will have to be more selective about how they deploy and in what size and so on and so forth.
Yeah, I think a lot of it makes sense. And the trends that I have seen is during the Q4 of 2024, a lot of funds were rushing to deploy because everyone thought this is probably the peak of the cycle. We need to make sure we deploy our capital. And a lot of the funds that I work with, collaborate with, they are fundraising right now. So that's, I think, one of the reasons why you see fewer number of deployments. But then the second trend that I'm also seeing is the funds that have some liquid capital left to deploy, they sort of bought into the dip of the Bitcoin, Ethereum, and Solana. So they're parking their capital in the liquid strategies. And one of the reasons for that is they're not seeing any new high conviction narratives. And I think the investors will start focusing more on the projects that will generate revenue or will be revenue positive and are not just narratives. So I think you'll see a general shift in the trend on how the investors are investing and deploying their capital.
Thank you for your opinions and insights. Since I'm a little bit in wrapping up position here, I think that's, for me, markets are really interesting right now because we are seeing all the macro trends, that it's hard to raise, that general sentiment about crypto might be rivaling. But on the other hand, we see great shift in AI adoption, in the adoption of tools which enable things which were not imaginable a couple of years ago. So I think that those trends will converge, and founders will be seeking fast deploying, really active venture capital they will raise more from friends and family, which will challenge the status quo in the VC zone. And we will see more rapid prototype deployment, more rapid hypothesis testing, which will be a source for hopefully our productive conversations in the next year.
So for our case, actually, quite similar to what Kelvin has described. We raised 100 million in 2022 and been deploying, right? And the market actually changed so much. I think maybe the major point of change here is the exchange landscape. Before, we have many options for tokens to be launched, and the market share was, more evenly distributed. And then we have Binance, taking the majority of the market share, and then they have this dominating power of negotiating with projects and asking for, a bigger percentage of the projects for all of the, IO, listing, pool, all the different kinds of products. And it's been a little hard for projects to really digest to that because the huge airdrop and huge, token incentives to everybody, right? To the exchange users, to the exchanges themselves, and then to the market makers. It is making the VC life a little bit harder. So we are, trying to find a way around, doing maybe more advisory, to be more hands-on, to know what's really going on with the projects, and also looking at more opportunities, maybe in the liquid market. It just because it's already having access to all the liquidities out there without going through the biggest challenge right now in the market is to getting listed on the biggest exchanges, right? So my second question is around what you think of the global markets right now, given US now having this new president, Trump coming back to Washington and announcing this 200K Bitcoin reserve, and however, on the other side, also announcing this triple-digit tariff on pretty much everywhere, and is giving the economy a little bit hard time. And then on the other side, we have Dubai, so proactive on deploying into token deals and just blockchain industry overall. And then we have Japan trying to cut the tax for a little while now, and last time I checked, last month there on a conference, they're actually going to do it the next 12 months, which is looking very great for token investors there. And then we have Hong Kong issued retail exchange license to the exchanges there, and also getting more retail buying power with all of the public listed companies and ETF approvals. So is that all of the policies around the world changing your investment thesis, and what are you thinking for deploying into different markets right now?
Right, so honestly, we're still open for soft landing. That's the first thing. There's still a lot of the evidence to, I wouldn't really say strongly believe, but still forecast that what's currently happening is still somewhat controllable chaos instead of just madness. But yeah, eventually, the Trump is obviously, I'm sure everybody's aware of that, has given a 90-day tariff window for all of the negotiations and trade-related negotiations. I'm not sure if 90 days is enough. I don't think it will be. But I'm sure that the major trends in terms of seeing the tariffs decline, because obviously that's not maintainable, that's not stable to have such trade wars with China, such trade wars with EU, especially that they're both the major partners for the US economy. Obviously, they're going down. Obviously, the rates are going down as well in the sense that there is enough data for them to lower the rates. There's different takes on this as well, but from what we're personally anticipating is that the rates are going down and they are fueling more loans. Obviously, they're fueling more movement of funds within the US. And we're not actually forecasting the recession that in the sense that it would be a long-term one. We don't actually think that, at least with the current data that we have, that recession is still at such a high possibility as the market forecasts it. And potentially by the end of the year, what happened historically, because that's not the first time Trump announces tariffs, that's not the first time he talks about them, and it's definitely not the first time in history that happened for sure. And if we check the historic data for when Trump introduced those tariffs back in 2018, 2018 and at the time that he was president for his first term, we can actually see that indeed for the first, like, obviously those tariffs were limited. Obviously they're not as massive and as, they're practically introduced for every single country in the world right now. Obviously back in the day they were for a limited number of countries and for a limited number of goods. Not necessarily all of them were essential ones. But still, if we check the data for those selected goods that were tariffed back in the day, we can clearly see that for the first 3 months, there was indeed a lot of turbulence, obviously, that causes temporary inflation, obviously, because the price goes down as a result of surplus in the price value. But over the long term, from 6 to 12 months, we actually saw that in countries where there's strong domestic production, the US obviously is the country with strong domestic production, the prices actually went down long term because people eventually stopped buying the imported goods because of the surplus, obviously, and started shifting more towards the domestically produced products, goods, etc. So hopefully, if that's what happens this time as well, at least for the majority of goods, and maybe some of the tariffs maybe get canceled down, not even lowered, but actually canceled, then this is obviously good for the economy long term. And I'm sure that US is also a major benchmark here and a major flagman in the sense that what's happening in the US is also influencing all of the other events, that's for sure. And when it comes to deploying capital, I think actually that those two questions are slightly, right now in the modern world specifically, I think that they're slightly uncoordinated in the sense that while the economy is still in question whether it's going to recession or not, the AI is actually booming right now. And those two sectors are going absolutely separate roads because AI is practically what's driving the US economy, at least the stock market growth for the last year. And I think that those two questions are like kind of separate in the sense that I think that the AI trend, obviously it's major already, but even in the coming years, maybe even quarters, I think that it's going to get exponentially bigger as well from here because there's so much progress made and there's so much more progress being made that it's absolutely evident to everybody that to crypto, to all the other sectors of our life, to all the other sectors of our investment, I think that AI is eventually becoming an essential add-on, which is going to be significant for every single product out there. Yeah.
Yeah, I think from a policy standpoint, I think the direction of the US is very clear now. And what I'm hearing is that the SEC will probably have a proper regulatory framework out before the end of the year. And once the regulatory framework is out, it will kickstart conversations between all the major financial institutions about what they want to do in the space, right? And every bank, every investment bank today is sort of starting to plan for when those regulations come out. And of course, the US being the deepest financial market in the world, people are looking to the US to set these regulatory standards, and then basically everybody else will follow. So I think the regulatory tailwind is going to be very powerful for the industry over the next 3 to 4 years, and will bring a lot of institutions into the space. Short term, obviously, we've had a bit of this macro volatility over the last few months. I think the US, Trump, grossly underestimated China and Xi in terms of how hard he could push them, and was frankly quite surprised at how hard they pushed back, right? But I think the markets, in a way, kind of worked because we had a couple of days when obviously the equity markets were closing limit down almost every single day. We had a couple of days of very significant bond market volatility, and obviously the 10-year treasuries spiked because of that. And I think that really sort of sounded alarm bells in Washington, which then caused the 180-degree pivot. So I think now at least the market kind of knows where that the bottom line is that you cannot cross. And to me, that's important because that means that we're unlikely to sort of experience what we experienced over the past month in terms of market volatility. And I think just given how much prices have corrected, given how underweight most investors are, I think that sort of is a good setup for the rest of the next few quarters.
Yeah, I think so. The way we've thought of investments in general is like we invest in projects that have a global scale or a global impact. But then, in general, when thinking about the regulation, I think US sort of becomes an attractive market for investing in things like RWAs, stablecoin-based projects where, regulation has a lot more impact. But then when it comes to, some more innovative token models or more innovative infrastructure, I think I've seen those come out of the rest of the world. So as far as our investment thesis is concerned, like we are open to like, looking at US and non-US. Because I think I learn a lot from non-US based companies because there's a lot of innovation and then that sort of trickles into like the US regulatory landscape and then regulation will get established. So I think global focus is what we emphasize.
Thanks. I think regulation might be really deafening and suffocating, and on the contrary, Trump policy might make that regulation in a way that will enable banks and even like organizations without banking license sell the crypto assets to more broad audience. But the contrary take I've heard or shared during the during the conversation over this week is that mass adoption might have already happened, and everyone who wanted to own Bitcoin or any other your favorite crypto asset, they have purchased one or they have got their hands on one. So here I definitely lack the tool to bet on the volatility around dollar, and by volatility around dollar I mean that I really don't know how the adoption of the stable coins, the tether mate with the plasma ecosystem they're going to develop, and the launch of local stable coins such as recently launched ZAR by Dragonfly, launched in the Pakistan with crypto advisor of Pakistan. We all know who he is, and I definitely want to spend more time researching this angle, like what happens to dollar put on the crypto rails with the brakes off and billions of people effectively getting access to this tool, because this will definitely shape and influence macro sentiment. And I even can't approach to think what it would be like. Is it bullish? Is it bearish? Is it bullish for Bitcoin? Is it bearish for the dollar? So, but I definitely understand that with the momentum created around regulation and around stable coins adoption in the first place, whether US dollar denominated or Hong Kong dollar denominated or like rupee denominated stable coins, I think that the gin is out of the bottle, and this is a great opportunity for the investors to think things through and make their bets, because ultimately that's, I think, our job to understand what the tectonic shifts will bring us and how we can assist or just get out of the way, which sometimes is more important than assisting the shifts.
So personally, I think the US policies on crypto now actually affect two things positively. First is for all of the different layer ones ecosystem development. SEC dropped the cases on pretty much everybody, and then now they're all moving back to New York. So we see like the Solana Summit is happening next month in New York, and before it was all Lisbon, everywhere else, right? So with that underground rules changed, we'll see more activities and support from foundation and Treasury itself to support all of the ecosystem projects. I think that's going to be very positive for especially for VCs to do more investments and see actually good projects grow out of it. And I think the second is institutional buying powers. I was at DAS in New York in February, and it was probably the conference I attended, all the way from 2017 till now, the most institutional focused. Like we see all of the ETF issuers, we see even like Blackstone, BlackRock, all the banks at the conference. So with the institutional buying powers and liquidities coming into the market, even just last week alone, ETF spot for Bitcoin absorbed about 3 billion. And now it holds about 6% of the total supply of Bitcoin. So this change of liquidity layer, does it change your mindset and your calculus of how to deploy token and investment into different categories? For example, maybe RWA or derivatives?
I don't necessarily think that ETFs specifically are influencing our strategies at the moment because obviously the ETFs are only available for a very, very small selected number of assets. But it's definitely an interesting trend that there's more and more liquidity being controlled in the ETFs rather than compared to what it was and compared to what was anticipated. But I don't necessarily think that this is majorly influencing what we feel like about the trends for the other tokens that are not affected by the ETF. So I guess it will be short answer to this one.
I think we're going to be careful about talking about the ETF flows, right? Because sometimes you see really big numbers on the Bitcoin ETFs or, well, less so Ethereum ETFs, because not all of that is directional flow, right? So they could be buying, going long the ETFs, but actually short perps or short the Bitcoin futures. And essentially trying to just, generate the basis trading returns, right? And a lot of the large systematic funds, traditional funds, do that, right? And so it's not all directional flows. In terms of the participation of institutions, I think they're coming, and they're very, very focused on tokenization, right? So I think that will accelerate the bringing of real-world assets into on-chain. And one of the interesting conversations I had earlier this week was a lot of people kept talking to me about yield, right? Because they look at, for instance, the Bitcoin yield on Babylon, right? And I think currently you get something like less than 1%, which really isn't that interesting. And a couple of these founders were telling me that there is a lot of demand from BTC holders to get yield, but they can't find yield anywhere. Right, and so they're asking us, how to generate yield, basically. And I think RWA could go towards solving some of that problem.
Yeah, I think, I agree with Gleb that ETFs are only available to a very small percentage of the population, but then a lot of capital also comes from there, like the institutions. So I think where I'm bullish on is the RWAs, because that's what institutions are familiar with, and bringing them on-chain makes the most logical sense. But then something which I think may not be very obvious is like the investment in infrastructure, right? Especially around AI right now. So investing in building out AI infrastructure like data centers or companies that are building around the AI infrastructure. So I think those also will become very attractive because from an institution perspective, it's a very tangible asset which can generate yield. And I think for most investors, like yield is the constant question that they keep asking us.
I think yield is really important to the institutions and the retail, and in the end of the day, it's retail money as well flowing into the ETFs through the pensions fund, through like any other type of fund which individuals can invest in. And I definitely see how inventory will expand further to accommodate liquidity, because when there is demand, there is supply. And if I learned one thing being in crypto and financial markets, is that supply and demand go back to back, and there is no direct connection between them. By that I mean that you have to first solve chicken and egg problem always. So basically, pouring over supply, then demand grows, and gradually this leads to the growth over time. So I think that we will see more RWAs, of course, coming on-chain, and I think that underestimated asset class, which we can see emerge in the future, is some asset class which will be similar to CDBCs, like more regulated RWAs with the KYC-gated access or some extra regulation, because I can definitely see how carry trade solutions will emerge in the form of stable coins or ETFs or RWAs or other digitals under over-regulated assets, as long as pure crypto decentralized RWAs which will enable capital flow from investors, I don't know, from South America to Central Asia, because everyone wants to make sure that they are protected against inflation, that they have a tool to save, unless they are happy with their savings account at their local favorite bank. But they always are not fully happy, and they will seek and they will find, and the market will help this demand to find its supply.
So speaking of yield, it's quite interesting, right? Like a lot of the yields are not even liquid. It's points. And you don't know what's going to happen when the token actually get listed. However, I think a lot of the institutions actually chose this path is because some of the protocols that offer credit staking, so the custody is still by themselves, right? Because security is the underlying most important factor for any institutions to think about deployment, right? So, not very recently, but we've seen the big hack of Bybit happened. And there are so many hacks on DeFi that happened accumulatively in the industry. So what are you guys thinking about the underlying security of the industry? Are you investing into any audit as a service or self-custody, modulars? What are you thinking? Are your thoughts on this?
Yeah, I guess security is definitely the major part of what every internet company does right now, especially for us as market makers. We obviously have to store clients' assets, our own assets as well, and this doesn't come without risks. There's different use vaults for that, etc. I don't think there is much point in going for this specific panel and going into details how we store our assets specifically. But what I think is clear is that the Bybit incident, a lot of the other incidents in crypto, they're definitely underlying that security, it's probably a major part of what every single company that stores assets should invest into, given that the risks and the number of attacks, the number of threats that are going to be present not only for institutions but for retail traders as well, are only going to go larger with a more active use of AI in obviously those kind of hacks. And I guess eventually, the more power those computers are going to have, obviously the more number of combinations they're able to run at an instance. And this is something that influences the security of every single vault in the world, every single wallet in the world. And obviously, there is a lot of speculations that eventually the 12-word seed phrase is going to be eventually hacked by a number of supercomputers at a very short time frame. And there's a lot of questions about the security. That's why, obviously, institutions are running multi-sig walls, a lot of precautions. But as we see with Bybit, that's not enough. And I guess security is a major trend, not only to invest, but also to potentially develop in-house as well for certain parts of what companies do.
Yeah, so I'll be quick on this one. I think if you look at a lot of the security problems that we've had over the years, a lot of it is not because of the underlying technology, right? A lot of it is because of human error, right? Either because it was not decentralized or somebody along the way sort of makes a mistake, or because the hackers become increasingly sophisticated and they use social engineering tactics to exploit any loophole or human weakness. So obviously the industry is still learning how to get better at it, and I think we will get better at it. The financial institutions that are going to come into the space, I mean, they are going to be obviously even more rigorous. Many of them will only operate within certain clusters, like KYC pools and stuff like that, so they're not going to be as degen as the existing users of DeFi and so on that exist today. And then the last thing I'd say about security is that, I think the authorities need to take a stronger stance, right? I mean, we know who some of the real bad actors in the space are that have exploited the industry time and again for billions of dollars, and I think the regulators need to come together and do something about it.
So I have a technical background, and I take security very seriously, like even when I'm building my own projects. And one of the things that I've seen in Web3 is the security hasn't kept up with the other development in the blockchain space. So a lot of new protocols have evolved over the last 5 years. A lot of new applications have been developed on it. But if you think about security is at before going live, you have to audit your contracts. A lot of that process is still manual, and there are long wait times for development teams to get on the list to get audited so that they can deploy their contracts. And then once your contract is deployed, you go into the actual transactions. And I think what's needed is real-time monitoring of these transactions so that the attacks can be preempted. There is some investment that has happened in that space, but I think a lot more is needed for these types of hacks to be avoided or preempted. So yeah, I wish to see many more investments being done in the security space, and even funds focusing specifically on security of the blockchain.
Thanks. Since we have really diverse audience, guys, never disclose those secret words to anyone. This is the first rule of crypto, and we cannot stress it enough. So don't ever pass your seed phrase anywhere. Read articles, watch YouTube videos, be really serious about it, because you are ultimately frontier of your own self-custody guarded assets. And I think this can be applied to the institutions and to any companies as well, because unless we are already there, we have to wait some time for AI agents to take their turn in trying to build companies and to interact with humans. And we'll have another problem to deal with, how to teach AI agents to secure their assets and how to be more attacks prone. Another thing, of course, you should be vigilant yourself, because conferences are sweet spot for different hackers who are approaching the attendees and speakers, setting up chats, sending some files. So speaking of security, I want to double down on the practical level, sharing those insights which you might not have heard or have forgotten about, that practically human is and always will be the weakest link in the loop since the Kevin Mitnick times up until recent hacks. Human and you are the weakest link, so you stay vigilant, you stay focused on what you are doing, what you're performing, making sure you know your counterparties. And on the industry scale, of course, education is the answer, because education is an ultimate answer to the human question, and more sophisticated tools and systems which will combine education, I think, because there is a problem, I'm not sure how it's called, but that spiraling, or it's connected to spiraling, that basically when the system operating the security becomes so complex that you cannot comprehend how it works and you cannot understand the number of safety switches. Basically, if you trust your safety system too much, it becomes inefficient because everyone trusts it too much. So we will definitely see educational-focused solutions emerge from that trend, because with the growing complexity, it will be yet another cultural / ecosystem problem for the InfoSec to solve. And I'm like really curious how they will approach it and how they will tackle this problem.
All right, we're running out of time. Thank you so much for this amazing panel. Thank you.
Thank you, everyone.
Thank
Thank
you.
you, guys.